Hi, and welcome again to the CDFM study group. My name is Helen Thomas, and today we're going to be covering CDFM Module 3.4, which is the auditing section, and it's actually the last section for the Module 3 exam. We're going to go to page 3.4.5. Whenever you cover a particular section, you want to find out or you want to determine what law requires the Department of Defense to adhere to that policy. So since we're talking about auditing, you want to look at the law that mandated for all DoD agencies or sub-agencies to have financial statements that are auditable. And if you read through that on page 5, you will see it's the Chief Financial Officers Act of 1990. That was the law that required all agencies to have auditable financial statement. And for let's say, for example, the Army, that's why we have GFIBs, and we were required to be auditable by the end of fiscal year 17, which we just closed. So that means at any point, our financial statements should be audited. So somewhere between now and the next year or two. That's the purpose of GFIB. So CFO Act of 1990 was the law that required DoD agencies to have auditable financial statements. And you can read through all of that on 3.4.5. There's some more information from page 6 through 8. You can read through that on your own. All right, auditing overview. You always want to know the definition. So the auditing is an essential part, which we know is we have financial data, we have our general information and processes that are in place. But again, whenever you deal with public funds or resources, we must be audited. We want to make sure that individuals are utilizing those resources in the right manner. So the auditing is an external organization coming into your organization to review your processes and your financial statement. On page 3.4.9, it says a government audit is a comprehensive assessment and report on the financial condition and also your performance in your organization. So when it comes to these definitions, don't sit there and try to memorize it word for word. Pull out the vital information, because those are trigger words that you have to get in order to know which one to select. So for auditing, we see the word comprehensive assessment and report on our financial condition and or the results of our performance. Do we have the right measures in place to provide accountability of those limited resources? On page 3.4.10, it talks about the government auditing standards. The first paragraph, you see the acronym GAO. As you're studying, you want to pause right there, ask yourself, what does GAO stand for? Who do they work for? What do they do? So GAO, before I even read anything else, is the Government Accountability Office. Who do they work for? They work directly for Congress. The GAO is responsible for the external auditing of the executive branch. And for auditing purposes, everybody falls under the executive branch. So the purpose of the GAO is that external auditing agency that's report directly to Congress. So the reason for that is Congress, when they give us the appropriations or the funds, there are various limitations, guidelines placed on those appropriations. Well, we know if no one's checking, just like a commander, whatever the commander does not check, chances are it's probably not getting done. So to ensure that we adhere to those guidelines established by Congress, the GAO functions as that external auditing agency to validate us and verify that we are actually following the rules and regulations established by Congress. So on page 10, we get the regulation that GAO publishes. So they're the highest authority. If they're coming out to evaluate, you want to know what kind of standards are they evaluating us by. So the GAO standards for the government is referred to as the Generally Accepted Government Auditing Standards, GAGAS, or the Yellow Book. Associate those two words, Generally Accepted Government, so it's GAGAS, Generally Accepted Government Auditing Standards / Yellow Book. The reason for that is because earlier in this module, we talked about the GAO Red Book. The Red Book deals with appropriations law and the uses of those appropriations. So you've learned the Red Book. Now we're talking about the Yellow Book, deals with auditing standards. And then at the very end, you'll see there's a third book that the GAO publishes that are used as guidelines for us to establish our financial management. So that's on page 10. So on page 11, we look at the 4 general standards for an audit. You have auditor independence, auditor professional judgment, auditor competence, then quality control and assurance. Plain and simple, 4 different things. Ensure that you understand what follows, what's the definition, what it means to have auditor independence. And it's very simple because independence means if I'm auditing this organization, I have no invested interest in this organization. So I will not be biased. I will not be influenced by the leaders because I have no association. So auditor independence is number 1. And if you read through all of that, it talks about it. On page 12, it talks about the threats that an auditor can face if they don't have that independence, that bias we talked about. Talk about self-interest. The second general standards for auditing is professional judgment. Again, if you're an auditor, you're expected to be professional in the way how you conduct your investigation or assessment of the organization. And it goes through a list of items that an auditor professional judgment involves. So that's on page 13. And I'm not going to linger on these because they're pretty straightforward. Know what they stand for, what they mean, the importance of them, so that if you are asked a scenario that jumbles up that process and then you have those 4 choices to select from, you will know whether it's competence, whether it's judgment, or whether it's independence. Competence is on page 14. On the second paragraph, it tells you that an auditor, regardless of what level they're at, they're required to have 80 CPEs, continuing professional education every 2 years, and also a minimum of 20. So you can't just do all 80 in the first year. As an auditor, you have to do at least 20, and then you do the remaining 60 in the next year. So you can spread it up that way, or you can do 30-30, but the bottom line is you cannot just do all 80 hours in one fiscal year. The final standard or general standards of auditing is on page 15. Well, the auditing agency itself must also be evaluated. And in the second paragraph, so actually let's read the first paragraph. It talks about the first 2 components. First, the audit organization must establish a system to provide reasonable assurance. So they must be confident that whenever they reach a result, that they have reasonable assurance that based on their processes, that they can give you their finding and recommendation. The second, audit organizations performing audit, they must follow the standards, which makes sense. And they also must have an external peer review. So I think on the next, in a little bit, we're going to look at the DoD auditing agencies. So those at each level will have an external auditor comes in and to evaluate them. How often? On the bottom of page 3.4.15, this last paragraph, how often are these audit organizations supposed to be evaluated? It says it on this, like the third line, at least once every 3 years. They must then also themselves be evaluated to ensure that their processes will give them a reasonable assurance for evaluation. How it works on page 16, you can read through that. Page 17 talks about find different types of audit, financial performance, attestation engagement. We're going to look at those again in a little bit, so I'm not going to linger here. Page 18 talks about DoD specific. So if you notice, we went from GAO and then now we're going down to the DoD audit functions and standards. So DoDIG is the auditing organization, Inspector General. So the Inspector General Act of 1978 requires that federal Inspector Generals comply with the Comptroller General standards. So I'm reading the first paragraph on page 18. And if you can remember, the Comptroller General is the individual in charge of the GAO. So you're going to see Comptroller General a number of times. You got to be able to understand, relate that a Comptroller General is in charge of GAO. GAO is an external auditing agency that works directly for Congress, and it audits the executive branch. Page 19, those are the 4 types of DoD audit agencies. So we talked about the Office of Assistant Inspector General, so DoDIG for auditing. Army Audit Agency, for Army, you hear them say a AAA audit is coming in. The Navy has one, and the Air Force. Those are the 4 on page 19. So when you read through that, make sure you know that. Internal audits on page 20. It mentions contracting for audit services, that sometimes the DoD does not have enough, so they do a contract for an external organization to come in and audit the DoD agencies. On page 21, it talks about types of audit. So what I want to pinpoint before we go to the types is that last paragraph on page 21. That is another audit organization. So what that relates to, on page 19, we looked at the 4 DoD audit groups. On page 21 at the bottom, it mentions another DoD audit organization within the Department of Defense, which is the Defense Contract Auditing Agencies. Their sole purpose is to audit all of the DoD contracts, however they set up their evaluation. And page 22 gives you a chart of the 3 types. It gives you the description, and on the far right, it gives you the standards, what standard that is followed to do those engagements. Do a little bit more research. You can go on Google and some other resource to understand the last one, attestation engagement. I haven't found anything that clearly explains it a little bit better than is listed in the study guide here. So you may be able to find something on it. So you have financial audits, performance audit, and attestation engagements. 23 again talks about the laws, regulation, contracts, and grant agreements, fraud, waste, and abuse. That's the whole sole purpose of whenever we get audited, whenever we do internal control, we want to make sure that we have all the processes in place to avoid fraud, waste, and abuse of these limited resources that are given to us. The bottom of 23 talks about non-audit services. So that means auditors can also perform non-audit services. So they're helping you get ready for an audit. So whatever those contractors that are helping us get ready for the getting GFIPs ready for that to be audited, those organizations cannot then come back and audit us. So that's what it means. Remember that first general standard, auditor independence. So they cannot have anything to do with us being audited because they helped us prepare for that audit. And so they have that bias. They might be biased because they helped us with the system. They might be biased in their evaluation. So in order to avoid all of that, what that non-audit services is saying on the bottom of 23 is they can do those things, but understand that they cannot then audit your organization. When it comes to an audit, unlike an internal control, your commander, your supervisor selects what areas to be evaluated, or it may be based on a checklist that you have from DFAS. The audit is evaluated and selected by the auditing agency. They select what area they're going to come in and audit. So that's what it's talking about on page 3.4.24. So you can kind of read through that. It's pretty self-explanatory because, again, we have so many functions that we perform that we know all areas cannot be evaluated. But there are important functions that we perform that if we don't do those things right, we can abuse, we can lose those resources. We can also increase the risk level because risk is associated with every decision that we make. All right, let's move on to page 3.4.25. And that begins the phases. So there are 3 phases of an audit, which makes sense. Everything always starts with a plan. So in the plan, it's on the bottom of page 25, you're determining, okay, define the audit. What type of audit is this? Is it a financial report audit? Is it a performance audit? What type of audit are we doing? Develop the scope. Again, we don't have time, effort, manpower to look at everything within the organization. So those are all the things. So what you need to do here as you're studying, look under the planning phase, look at all the things that happen and occurs in the planning phase so that when you get to the review phase, you can differentiate what happens in the planning versus what happens in the review versus what happens in the report. So 26 goes into the review, and the only thing under the review that I see that sticks out is at the bottom, that last paragraph, the standards require that auditors document the evidence. Makes sense. If you do an evaluation, you know in our business, if you don't have paper trail, if nothing is in writing, people don't sign off on these documents, and they never occur. So you want to make sure that you have the document. They gather in the form of audit documentation, formerly called working papers. So in the event you see working papers, the term working papers versus audit documentation, you know that is part of the review phase. That's what I mean. But still read through everything else on that page just to familiarize yourself. Then the final phase of an audit on page 27 deals with the auditor report. So they've completed their investigation, assessment, review, and the final, they have to write up their report. So what it's saying here is that report needs to be written, a written report or electronic format, and includes the objectives, the plan, what the plan was, what you plan to do, what you did, what your findings are, and it also closes out with their recommendation based on the findings. The 4 bullets at the bottom looks at the types of opinion. Do not get confused when it says an unqualified opinion, in this case, is the best. Normally we say something or someone is unqualified. That means, oh, that's no good. But when it comes to audit and internal control, unqualified is your best. Qualified, meaning there are some exceptions. Disclaimer, meaning I cannot render based on what processes are in place, based on what the reports that I pull out of GFIBS, I cannot come up with the right opinion. And finally, the fourth type of opinion is adverse. So since you have a list of items, you need to know what are the four types of opinion: unqualified, qualified, disclaimer, and adverse. So if you get four choices with different mix in there, if you know what right looks like, you will then know whenever they mix it up on you. So in a report on a financial audit prepared under the Yellow Book, the auditor needs to follow the GAO's additional standards consisting of the following. So when it deals with financial report on the bottom of 27 over to the top of 28, those are additional items that needs to be included in a financial report. That's what comes out of GFIPS since most of us are on the general fund system. So performance audits again continues on page 28. The concept of an audit finding, again, self-explanatory: condition, criteria, effect, cause. And when the recommendation is given at the top of 29, it says that you're addressing the cause. What's the cause of the issue? What's the cause of the problem? The recommendation is then, how can you best utilize this process? How can you increase your timeliness of transactions? Because again, we can't get one-sided. Financial managers, you're not only budget analysts, you're also a finance officer, finance personnel. The bottom of 29 simply says, in an audit, what we're looking for are monetary benefits. How can we save money? Cost savings, cost avoidance. I'm avoiding making these payments. Or non-monetary benefit. Does it enhance our timeliness? Can we do more? Or accuracy rate. There's really not a monetary benefit on that because we're not getting paid anymore because we are accurate in our payment. But again, it is a benefit because we can process more transactions, ensure that the government isn't charged any interest rate because we did something wrong. And by the time it gets back to us, let's say it's a contract, you're paying an invoice. By the time it gets back to you, it's past that 30 days. So now the government has to pay interest. Non-monetary benefit is in the accuracy and the timeliness, but that's very important. So whenever you're looking at benefits of the decisions that you make, you're not only looking at monetary benefit. Does it enhance our morale in our organization? There's not a dollar amount on morale, but again, when people are motivated and dedicated to what they're doing, they tend to perform at a faster rate and to produce more. On page 30, so we talked about GAO, Government Accountability Office, the GAGAS Yellow Book dealing with auditing. We also talked about the GAO Red Book, which deals with federal appropriations. If you read the last paragraph on the bottom of page 30, they also introduced the GAO Green Book. The GAO Green Book covers your internal control processes. So ensure that you know the difference between the Green Book, deals with internal control, the Yellow Book deals with auditing, and the generally accepted government auditing standards, and the GAO Red Book dealing with federal appropriations. So it looks like we are at the end of the auditing section of CDFM Module 3, Competency 4. Thank you for stopping by, and I'll see you again next time.